Hello and welcome to Investing Confidential. Today, it's all been revealed. The whole job scam, all this jobs data that the White House and all these economists have been saying. Oh, we're going to have a soft landing. We're not going to have a recession. Well, it's all blown up. Okay, today it's all blown up. Okay, we had jobless claims, we had job openings, we had layoffs accelerating, average hourly wages going down, everything going against this narrative of we're not going into recession. Okay, couple that with the Fed last couple days. I mean, this Powell showed his true colors. He is a dove, but unfortunately for him, okay, and fortunately for everyone else, and I do say fortunately, they're going to have to keep rates up high, going higher to normalize this economy. Okay. Bottom line, folks, the Fed cannot pivot anytime soon. I don't think there's going to be a pivot till 2025, maybe mid 2024, the earliest. Okay. Not great. Inflation running hot. Okay. We saw that already. I mean, how many times I've been saying this since last year? Inflation sticky, it's running hot. Okay. Another big thing today came out. Before I go into all the details on this job garbage, the 30-year bond auction. Probably none of you saw this today. 30-year bond auction, okay, came out at 387 versus 358. Okay, 358 was what they thought it was going to be. Boom, it goes higher. That means the auction failed, guys. It failed. Okay, we're seeing this all along. No one's talking about it. These bond auctionings, they're forcing the rates higher. People who are buying bonds say, "Hey, I'm not buying at 350. I want 380. I want 390. I'm eventually going to be 4. Eventually going to be 5." That's where it's going to go. Okay, these bonds are going to fail. The U.S. government has a major problem. Okay, a major problem. Look at this. Look at this again. I don't want to be partisan, but look at this budget. I mean, this is a disaster. They are telling you up front, in your face, okay, that interest paid on our debt is going towards a trillion. It's going to be a trillion. They're telling you 800 million. It's going to be a trillion. A trillion. This is insanity. Okay, we're going to start talking about the worst case here, which is dollar weakness and massive deceleration of an economy that the Fed can't even stop. Okay, and this is why you need to look at overseas assets. But let's talk about these stats today because the job stuff is front and center. Okay, let's start with jobless claims. Okay, jobless claims. They went higher, folks. Okay, it's the jump we've been predicting. I think it's the beginning of a hockey stick higher in these numbers. So let's look at some of these numbers. Okay. Okay. First, here's the seasonally adjusted data. Okay, we're showing claims 211,000, an increase of 21,000. Okay, that's a big percentage increase, folks. It's a big percentage increase. Okay. Now, I do like to look at adjusted data, but look at this unadjusted data. This really is kind of shocking because what it is the actual raw numbers. Okay. The actual raw numbers showed a 17.5% increase in jobless claims, people filing for unemployment. Okay. This is overnight. Okay. Remember, not only a few weeks ago, they were telling you how good the economy was and how strong the job market is. Well, overnight. Okay. And I think it's because all of this talk from other YouTubers and other people talking about something that we've identified months and months ago, that all of this data is flawed, it's outdated. I think that it's coming home to roost. Okay, and they can't hide it anymore. Okay, they cannot hide it anymore. Okay, let's look at job openings. Okay, job openings, the Labor Department, again, JOLTS report. This information is very flawed, but just let's look at it because this is what, again, data dependent. Okay, it's not accurate, but it's data dependent. Okay, what they're basically saying, essentially, there's no more demand. There's no more demand. Job openings are decreasing rapidly. Okay, and this doesn't even include what's going on in these job websites, which are also used in certain parts, Indeed and other, which basically can completely be manipulated. They're pulling back listings. You know, they're saying now that there's 1.9 jobs per person, when late last year they were telling you 3 jobs per person for available worker. Okay, this is rapidly unwinding. This whole scam of too many. There's a lot of jobs and nobody to. Okay, this is all bunk. It's been bunk from day one. The numbers have been manipulated, and here it coming down to roost, because as we talked about. And let's look at again. Third thing, layoffs. Okay, so we've had jobless claims, job openings decreasing, and now layoffs. Okay, and as we can see here, I mean, look at it. You could see the numbers with tech layoff. And by the way, this is just a small sampling of the layoffs that have been announced by the S&P 500 and the Russell 3000. It's across the board. And small business is even worse. Small businesses have dried up in terms of hiring, and small business is what drives this country. Okay? Don't listen to the people that tell you, oh, the layoffs, don't pay attention to them, they don't matter. No, layoffs precede unemployment. I showed it. I showed that chart. Okay, you can see it again here. Challenger, layoffs precede unemployment rate is going to skyrocket. And you know what, folks? The Fed can't do anything. You're going to see people rally the market on back of that, but do not buy into that rally, because inflation is what the Fed is focused on here. Okay. And then finally, average hourly earnings. Okay. Wages are up, but hours are down. Productivity is down. So it equals average hourly earnings. So the people are earning less because they're working less hours. They maybe their wages are higher, but they're working less hours. Their productivity is being cut. And it's really affecting small business. So you've had these four things that are showing you that we are headed to a deep recession. That's what all this means. That's what job openings decreases, unemployment insurance claims higher, layoffs are accelerating, and then you have average hourly wage going down. Folks, this equals a recession. The consumer in this country is tapped out, $1 trillion in credit card debt. They're borrowing up to their elbows. M2, the savings rate in bank savings, don't believe it. The savings rate is down to almost nothing. Okay, it's actually negative. I don't know how that could be, but as actually statistics say, it's negative. Okay, and the Fed is stuck. There's nothing they could do. Inflation is holding between 5 and 6%. Let's say 5% to be nice. Rates are going higher. Okay, 50 basis points in March is becoming a reality. No one believes it. But if the Fed does 25, okay, the market may rally for a day, but then it's going to sell off, because the Fed has to stop this. Because if the Fed doesn't crush the economy, inflation will accelerate back to 8-9%. That's the reality, folks. That's what the Fed is scared of. That's why Powell, who is a dove, who wants to bail out his private equity buddies, can't do anything about it. He's got no choice. I think I'm going to try to be positive in the next few videos and talk about what you can invest in this kind of situation, especially with the beginning of the dollar decline. Okay, you got to look overseas. But for now, as an investor, you need to be really careful out there.